Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, January 30, 2025. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Had a pretty good day all around the horn from a trading perspective today. Day traders, swing traders, had about a 60-point range intraday in the S&P today, but the structure of the daily chart remains the same. They're edging higher above all the moving averages. The trend is your friend, and what we said is if they get above this high here, which is 605.37, it's going to open the door all the way up to fill this gap up here. They tried today, but the closing print is 605.04, so they weren't able to sustain, trader terminology, sustain. They were trying to, but unable to sustain price above that high, but that doesn't mean they're not, and they are eating time off the clock, building energy to make a move higher to fill said gap. As long as they stay above the moving averages, then that's what they're doing, building energy to move higher yet again. Now, if they give up this low here in the 20-period moving average, and we've said this each and every night, then therefore that changes the picture. That would break the chain and change the scope of the market from above the moving averages, the trend is your friend, to below the moving averages, Irene is on the table. How about the lazy swing trader automagical algo system? How about Dover Corporation? Entry alert 189.45. We had an exit alert today at 210 even. She opened at 210, spiked it up to 215, give or take, finished down at 205.42. It's still a risk-free, emotionless trade. Dover, lazy swing trader automagical algo system. How does she know? We have something for everybody, whether you're a day trader, whether you're a swing trader, we have something for everybody. This is the lazy swing trader automagical algo system. How does it work? We start out with a watch list. Each and every day, members have access to a watch list of stocks that are coming near their entry targets. So you know what to expect. You can put an order in ahead of time. Of course, there are email and text alerts, but that's an alert from something that was already on the watch list. You get the best of both worlds. Here's the closed list. How's it been doing? You can see the gain or loss on the right-hand column here. This is a business of base hits. These are not long-term holds. These are short-term holds. They're swing trades, but they're not designed to be long-term holds. Sometimes it's a day or two. Sometimes it's a couple of weeks or so. 5, 3, 8, 3.5, -4.5. We do take losses from time to time. You can't be perfect. We're not in search of perfect. We're in search of really, really freaking great. 3.5%, 7.3, 3, 7, 6. You see what's going on here. There's a lot of base hits along the way. 11%. Here's another 6%er. That was a one-day hold. You have a current open position list. You could see here in this column, target number 1. You could see all the ones that target has been achieved. Target 2 achieved. We have multiple profit targets. We turn them into risk-free, emotionless trades. And in swing trading, having multiple profit targets and being able to hold on for some of the never knows that give you high percentage returns. For example, we're up 11% in Amgen total, 14% in K-Web total. These are ongoing trading opportunities. Here's IYT. I've been telling you the swing trader bought the transports where we were talking about support in the transports. Lazy swing trader, automagical algo system. Back to the S&P for a moment. Tomorrow is Friday, the end of the week, but the end of January. Are they going to paint the tape into the end of January, or are they going to pull the rug out or creep along some way sideways? We don't know the answer, but if they're going to paint the tape a little bit, then they're destined to fill this gap and even potentially make another new high situation going into the end of January. Awareness is. How about a bit of a bonanza today inside the numbers? I'm going to show you some important things that happened, trades that happened, both long and short. We had good volatility today, and we started the day by saying, hey, the volatility may be there today. Look at this 7:30 post. We should get some volatility today, which is a trader's friend. 7:30 a.m. Eastern Standard Time. How you doing? We had 604.50 as an early pivot. Above the pivot, she's bullish. Below the pivot, she's not. We have some unfinished business up at 605.80. So above the pivot, that's what the door opens for, 605.80. Right of the vertical is today's activity. Here's an SPY 5-minute chart, and guess what? 605.80 was a target and overhead resistance. 9 o'clock. The flip side is getting above the pivot, which opens the door for some unfinished business up at 605.80. Guess what? That means it's a target because above the pivot, they're going to go to 605.80 and 932. And look up here, next leg up at 605.80. And here you go, 947 above the pivot. The next number in the sequence is 605.80, which is a target and overhead resistance. Did we have traders take the ride up there? Yes. Did we have traders short at 605.80? Yes, we did. Did they take a ride downstairs? Yes, they did. How you doing? Let's look at the other side. 603.35 is a gateway to 602. Okay, fair enough. 603.35 is a gateway to 602. You could see the gateway. They bounced it. You could see the bull-bear battle at the gateway. It's good to know your numbers. What's the low in this candle? The low is 603.37. That information was put on the board also before the opening bell. 602, again, before the opening bell, 602, give or take, is a bounce back type of place, 602. And what we said in the live room was sometimes they come up short, other times they spike them through. 602, give or take, was a bounce back place. First they came up short and ripped it, then they spiked it through and ripped it. As you could see, we had a bit of a bonanza today in the live room. Pause the video. Read the notes, go back to the chart, and double check the work. It's all in here. I gave you the highlights. If you're interested in trading or already do trade the S&P, whether it's options, futures, micros, exchange-traded products, it doesn't make any difference. These are directional trades. You can benefit from these numbers. You'll do the homework, pause the video, and read the notes and see how the market reacted at these numbers that we put up on the board each and every day. How about stocks on the move? It's earnings season. We had a lot of stuff on the board today. We had Mickeysoft. We had Tractor Supply. We had Cat that didn't hit its number. It's off the board. But we had UPS and Comcast. DT didn't. It traded away. But we had 4 that hit their entry objectives. Let's take a look at some charts. First, we'll start with Microsoft. You could see getting a buzz cut at the opening bell. You could see this zone down here and how the market traded in that zone most of the day. But let's focus in the early part of the session where she came into this, and this is the trade that we're looking for. The one where it's early in the morning and you have the participation where she comes into the zone and absolutely rips it back up in the other direction, making a high of 422.86 by 9:45 a.m. That's the one where you get a $4, $5, $6, $7 rip in minutes. The numbers work. How about Tractor Supply? 53.68. Hit it, spiked it, ripped it back up in the other direction. Minutes later, you're at a high of 55.43. For those of you home gamers out there, it's almost $2 in minutes. The numbers work. PS on a wild ride today, getting a buzz cut at the open. You could see here the stock cut through the support area early in the morning, fought back there later in the day. The numbers work. They just took a wild ride down to about 110. What's going on over in Camp IWM? Well, they're still doing the same thing. They're eating time off the clock. We talk about it each and every night until they bust through or break the chain. They've been going back and forth in this channel, and this is essentially building energy in a bullish, flaggish kind of situation. And you could see it drawn here. Begins to make sense when you can visually see it. And if they continue building energy and break to the upside through this 50-period moving average, you're going to get a move up to and likely through this breakdown candle high up here around 233, give or take. This is a bullish situation until or unless they break the chain on the downside. Break the chain meaning go in the opposite direction, breaking this bullish flaggish situation and go in the other direction. In other words, breaking this or having this pattern fail. Now, what about the folks down at the transportation department? So everything was up today, right? The SPY was up 0.5%. The Qs were up 0.4%. The IWM was up 1%, my favorite market leading indicator. Transports, my number 2 market leading indicator, the folks down at the transportation department. But a number 1 canary in the coal mine, they were down 145 points today, likely on the back of UPS, which got taken out behind the woodshed. It was on the stock on the move list. We saw that before, but still, it doesn't matter. The index was down. Those are the facts. The reasons why don't really matter. And what you could see happen was they got to the entrance of no man's land here, spiked it and ripped it back up in the other direction. First time, best time, good place for, as they say in the trading parlance, a good bull-bear battle situation. These are the things that are taught in the live room, in these videos, MSF Masterclass, which this just scratches the surface. By the way, let's take a detour real quick. Let's take a look at Meta, and now we're talking magic calculator. Why am I bringing this up again? Because I think it's the golden goose. I think it's the golden ticket, the Willy Wonka golden ticket. What if I said, there's an important low, it's at 580 even. That's the low in this candle, 580. What if I bring over the magic calculator and I put in the value of the low, 580, and I hit calculate and check it out? You see one of the numbers that comes up all the way down near the bottom is 706.67. Now, look at that today. And let me explain. Yeah, there are tons of numbers on this page, but this is how it works. The market, or in this case, Meta, is gapping up today. It's at new highs, and you know 700 is a big fat round number, and it's gapping up, so you use the calculator to pick out some pivot lows. You pick one out that's important. You could pick 2 and 3, and when numbers converge, it has more importance. But for the purpose, there's a tutorial in the section, or in the master calculator product, or service, if you will. Explains all this stuff. For now, you're going to take my word for it. 380 was important. So this morning, it's gapping up, so you run the number into the calculator, and when you come up with the numbers, you say, okay, well, here are the numbers in the sequence. The next one down was like 693, and the market was opening above that number. So if it's opening above that number, you're looking up. You're looking to the next number. What's the next number? If it keeps going up. Well, the next number was 706.67, and you could see what happened here from an intraday perspective. They traded right to it, becomes a target, and guess what? Overhead resistance, first time, best time situation. Magic calculator. It's the golden ticket. If, capital I, capital if you use it properly. I teach you how to use it. Back from the detour, we'll go to the Q people. Now here's an interesting development. You have a divergence. Now let's go back to the spider chart. You could see here today even they got a stone's throw away. The high today was 606.60 and the gap is 607.97. So let's just say they were about 15 points away, give or take. That's 15 S&P handles, $1.50 in the spiders. You could even see from a visual perspective, the Qs are farther away from the gap, so we have a divergence going on. We have what's called relative weakness in the Qs. However, both sides of the tape, We're the umpire calling balls and strikes. They're above all the moving averages, so guess what? The trend is, in fact, your friend. Anything wrong with the weekly chart? Absolutely not. No problem. Put everything in perspective. Short-term thinking, intermediate-term thinking, long-term thinking. There may be a divergence on the daily chart. There may be some relative weakness on the daily chart, but when you go to the weekly chart, does that exist above all the moving averages? Uptrend, no problem. Doesn't look exactly the same on the weekly of the spider, but it's pretty close. The spider made a new high here, and you see the Qs made a lower high. Still divergence from a weekly chart, uptrending above all the moving averages. That would be the dominant thing. Be the umpire calling balls and strikes. What about the financials? Up 50 cents, flirting with, continuing to flirt with. We'll see where they close the week relative to the former highs. The former high is 51.62. Today's closing print, 51.77. We have, in fact, a new high. We'll demark the old high, and there's your daily chart. You could see they were flirting with it the last few days. They busted through it today, and they closed above it. We'll see if they could sustain price above it. One day does not make a trend. Write that down. Put it on a sticky note. What about the SMH, Philadelphia Semiconductor Index, as we call them in the trading parlance? Smash mouth. Important thing to close above. The high of this breakdown candle, 245.08. Closing print today, 245.17. They did close above it. They're getting into these moving averages. We talked about that exact thing last night. They're aware of this breakdown candle high by virtue of having closed at 245.17. Look at the hourly chart. You could see them flirting with it here. Look at the 5-minute chart, and you can see what happened into the end of the day. They ran up to close above that price on purpose. There are no accidents nor coincidences in the market. Let that sink in for a moment. How do you like dem apples? We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.